Hello guys, welcome to Susham Learning. Feel easy and go crazy on accounting. So what is the meaning of financial statement analysis? This is the second lesson on the third volume. So the meaning of financial statement is analysis of financial statement is a systematic process of analyzing the financial information in financial statements to understand and take economic decision. So the tools for financial statements are the financial statements have information on assets, liabilities, equities, revenues, expenses, and profit earned or loss incurred. So these are the one mark questions they can be asked mostly. So there are four types of financial statements: comparative, common size, ratios, and cash flow statement. So the comparative statement, it is a comparative study of individual items or components of financial statements. Comparative statement has balance sheet and statement of P&L. Various names are time series analysis and horizontal analysis. You need to know that this is the commonly asked question: what are the different names of comparative statement? So we'll next go to the common size statement. Two or more individual items of financial statements of 2 or more years are placed side by side and thereafter converted into percentage. So even here we have common size balance sheet and statement of P&L. The common names, like other names for common size statements, are vertical analysis and cross sectional analysis. So even this is one of the mostly commonly asked questions, and this most and everyone should know. So the next is ratio analysis. Ratio analysis, you will get 1 4 mark, and the meaning is the arithmetical expression of relation between two related or interdependent components: probability, profitability, solvency, liquidity, efficiency. The last tool of the last tool of financial statement analysis is cash flow statement. This is a 6 mark question, and you need to know all the activities. The statement showing the flow of cash and cash equivalents during the accounting period under operating, financing, and investing activities. So the next is types of financial statements. It is there are external analysis, internal analysis, horizontal analysis, and vertical analysis. So external analysis is for outsiders such as creditors. Internal analysis is for the internal management. Horizontal means dynamic analysis, and vertical analysis. Objectives and significance of financial statement: accessing the earning capacity or profitability, accessing the managerial efficiency, accessing the short term and long term solvency, interterm comparison, forecasting and preparing budgets, explainable and understandable. Uses of financial analysis: security analysis, credit analysis, depth analysis, dividend decision, general business analysis. Parties interested in financial analysis: management, employees, trade unions, shareholders or owners or investors, potential investors, suppliers or creditors, bankers, lenders, researchers, tax authorities, customers. The limitation of financial statement analysis: historical analysis ignores price and level changes, qualitative aspect ignored, suffers from the limitations of financial statements, not free from bias, variation in accounting practices, window dressing, and identifies symptoms. So, in the limitations of financial statement analysis, window dressing is the commonly asked question. So, window dressing refers to the presentation of better financial position than what it is actually is by manipulating the books of account. On account such a situation, financial analysis may give a false information to the users. So guys, here in the types, objectives, uses, parties, interest, and limitations, we need to at least know 4 points so that it will be useful in 1 mark. So thank you. We'll see you in the next lesson.